I also thought, Tim, that I needed to have access to millions and millions and millions of dollars just to break in the door. And I learned that not to be the case because I used to buy a ton of single family on creative financing. And I learned that you could do the same thing in commercial. So you
It's
don't
actually
need.
easier.
Hi, I'm Tim Bratz, and every week I sit down with the top influential entrepreneurs in the country to discuss how to leave a true legacy in all things happiness, health, wealth, and wisdom. This is the Legacy Podcast.
What's up, y'all? Welcome to the Legacy Podcast. Super pumped to have my boy Alex Pardo on here today. Alex and I have known each other for probably like 8 years, 9 years, something along those lines. And he's got the Flip Empire podcast consistently for, I think, about 9 years. He's been doing that. He's bought and sold mastermind communities, still runs a coaching business, this time now geared specifically for self-storage. He's transacted probably, I think we were talking 800, 900 single family transactions. And, you know, we had a conversation several years ago of like, dude, take a look at some commercial stuff. And I know we've had those conversations. You found your niche in self-storage, which is what we're going to be focusing heavily on in this episode. And I know you've already bought and sold over the past 4 or 5 years over like 300,000 or 400,000 square feet of self-storage facilities. Had some big wins, had a couple of tough deals too that I'm sure we'll talk through. And I really want to hit on some lessons learned over the past 12, 24 months that you wish earlier Alex would have known, right? And so, dude, excited to have you here, man. Tell me a little bit about what you're working on right now and what you're excited about for 2025.
Yeah, man. No, like you said, Tim, first off, man, just you're one of those people that just genuine, authentic person, man. So anytime I get a chance to just like chop it up with you, man, I really appreciate those opportunities. And to your point, man, we've known each other a long time, man. And it's been incredible to watch your growth and what you're doing with like the Legacy show and everything. So yeah, man, look, I think one of my biggest mistakes and learning lessons was not focusing on acquiring assets that, as you know, produce cash flow and give you the ability to build wealth. It's interesting because I'm very relational in terms of when I connect with people, and yet I found myself running a wholesaling operation, which, as you know, is all transactional. And I wasn't as wise as you, and it took me 14 years of running a transactional business to realize that like there's got to be a better way. And so I thought that was buying rentals, and quickly realized there's nothing passive about being a landlord, and didn't want to build a 100+ single family rental portfolio. And man, I was coaching somebody who owned a storage facility, and that's what really opened my eyes to that asset class. I always thought I was going to kind of follow your path. Like it feels like a natural progression to go from residential into multifamily. And when I really started looking at storage, it just aligned with a lot of what I was looking for in a business. I love the fact that storage is a business that has the benefits of real estate and not having to deal with long-term tenants and toilets. Like, I'm a terrible rehabber. I've done my fair share of fix and flips, and I'm just not good at it. So there was a lot of things that appealed to me about storage, but really, brother, like my love, what I believe God put me here for is to have an impact on people's lives. And so this might surprise you. Like, I'm not passionate about real estate. It's a business that I enjoy. I like it. But do I get up in the morning and say, hey, I get to go do another storage deal? Like, no. I use that as a vehicle, which allows me to work with people. So now, you know, to tie it back to your question, what am I working on? Really, my focus is on helping people transition from single family into storage, or even just adding storage to their portfolio. Because one of the things that I wish I knew when I got started was a lot of the skill sets that we've acquired in the residential world can be applied in commercial. Right. And I'm sure you would agree. Yes, there's some nuances in terms of how we underwrite deals and how we look at markets and opportunities. But a lot of the skill sets that I learned as a wholesaler and fix and flipper have translated nicely over into the storage world. So yeah, man, it's just an asset class that I really believe in. I'm bullish on it long term. Now, is it the same market we experienced during COVID? Of course not. Right. That was inflated in my opinion. But I am bullish on the asset class long term.
And I agree with that. Just to hit on that, it's like, this is what values were. They're going to come back. Like, dude, that was a fake market.
That's right. This is
interest rates will never be that low. Insurance costs will never be that low. Energy costs will never be that low again. Labor costs will never be that low again. Supply and material costs will never be that low again. Construction costs, dude, it was a fake market. You should be glad that you lived it while you were in it, if you were able to benefit from it. But the reality is, today's market is a real market, right? This is what a normal market is supposed to look like. It shouldn't be that easy to get access to money and to get that low of interest rates
Agreed.
and be able to refinance a property and your loan proceeds are more than what you would sell it for anyway.
Insane.
It's not
Insane.
real, right? And so I think people are like, oh, we're going to come back to those days. No, we're not.
No.
And if you are just in this days of thinking that those days, the days, right? DAZE, right? If you're in a daze of thinking that those times are going to come back, I think, dude, your head's in the clouds, and it's not a real thing. And if you can't figure out how to make money in this market, you're not in the right frame of mind. You got to figure out other ways to increase revenue, decrease expenses, get creative, work with the financing and the ways to raise money and being creative on and all that stuff in order to make deals happen today, which is what it's supposed to look like. It's not supposed to be as easy as it was 2, 3, 4 years ago.
Yeah. And it's interesting, man, because I hear people complain about like, hey, it's tougher to find deals, or the mindset of there's no deals out there. It's like, no, dude, like you just have to look through more opportunities. And I think
there were so many deals because everybody was selling because they knew it was inflated because they've been in the market for more than 2 years, right?
Yeah.
And so everybody who was smart sold a bunch of properties at a premium, realizing, dude, you see Warren Buffett doing it right now. I got a text message 2 days ago. Why do you think Warren's sitting on so much cash and keeps on increasing his cash deposits? Because the stock market is currently valued. The S&P is currently valued at 42 times EBITDA today. Dude, historical average is 22 times EBITDA. It's almost double of what the historic average valuation of companies is. And so Warren Buffett's been doing this for a little bit, right? The dude's been investing for 70 years, and he's seen some cycles and markets. And Warren Buffett realizes that we're at the top of a market. Like, you don't have to be a genius to understand, oh, well, things are pretty high valued, and I don't think people are going to come in and pay more than 42 times EBITDA for these businesses. Things might reset. Things might come back down. Historically, everything's cyclical, right? And if we're at the top of the cycle, that's where you should be selling, and then you buy at the bottom. The issue is emotions come into play for most people.
That's right.
And when emotions come into play, that's what sets the market. People get all excited and ramped up, and they buy when it's high and they sell when it's low. If you are a disciplined investor, and it's way easier talking about it than when you're in it, right? It's way
1,000%.
I bought crypto at the top and I sold it at the bottom twice, right? The past 2 cycles. But everything's a bubble. And as soon as you understand that everything is a bubble and everything cycles up and down, you can be much more disciplined in how you invest. And so it's the reality of the situation. One thing I do want to hit on going back real quick is, why do you think it took so long for you to make a transition into like get out of the mindset, right? I've always been the guy of like, what's next? And I'm probably overly impatient of wanting to push limits until the past couple of years. Now I am very like disciplined in what I look at, and I say no to far more stuff than what I say yes to. Why do you think it took 7, 8, 9, 12 years, whatever, in order to convert into buying commercial real estate?
Yeah, it's a great question. And it's one that I've reflected on in the past. It took me 14 years. I wish it would have taken me 7, 8, 9 years. I think the first thing is making it out to be something bigger in my mind than what it actually was. Like, I didn't realize that the transition, while there was a learning curve, and while I went out and invested in a coach to just accelerate the process, I made it out in my head to be, well, it's a lot more zeros. It's a lot bigger of an asset class. It's going to just be a bigger bridge, right, to get into that. And what I found is, yes, there was a learning curve, but I just made it out more in my head. So I think challenging any limiting beliefs you have around it. I also thought, Tim, that I needed to have access to millions and millions and millions of dollars just to break in the door. And I learned that not to be the case, because I used to buy a ton of single family on creative financing, and I learned that you could do the same thing in commercial. So
it's actually easier, dude.
I would agree.
Because they're business owners, and they bought it for residual income and as an investment. And you can have investment level conversations versus, a homeowner who doesn't think financially. They're not thinking the same way that business owners think. It's an easier conversation to have on the commercial side. And they're like, yeah, you're right. In order for me to get my price, I do need to sell or carry a portion of this at 2 or 3% interest. And for the buyer, it makes sense because you amortize that over long enough. You're paying down enough principal. You're planning on holding it. You're resetting the timeline of 10 years, and you know that you'll pay down enough and it'll appreciate enough over that amount of time, where we would be willing to do that and pay a retail price today. And then the seller's like, yeah, absolutely. I totally get it. And it's almost free money because the market hasn't been as strong as what it was 2 or 3 years ago. I missed my sale price. And so, dude, you can absolutely have those conversations and put yourself in a position to still acquire those assets. But it's an easier conversation with commercial real estate owners.
Dude, I will piggyback and double down on what you're saying. To your point, so one of the facilities I own today is in Amelia Island, Florida, which is just north of Jacksonville. Very affluent area. I think the average medium income there is like $143,000. That was the easiest seller financing deal I've ever done in my life. Bought it on 90% seller financing, got the 10% from a private lender, got ridiculously great terms, like no payments for a year. We amortized it over 35 years, which, as you know, in commercial, maybe not the most common thing to do. Typically it's 20, 25, at least in storage. Dude, that was the easiest conversation I've ever had about seller financing. I didn't have to educate the seller about it. He was more than happy to entertain it. In fact, he earns more in the debt service payment from us today than he did operating the facility, because he just wasn't treating it like a business. So anyway, back to your original question, I think challenging.
That's powerful, dude. And being able to go to somebody and tell them that, listen, I'm all in on this, right? We got a young team, a lot of vigor, a lot of vibrancy, and they're going to obsess over this thing. And we're going to get this to this level and pay you more in debt service than what you're currently making NOI wise, without you having to do any friggin' work. Like, that's an amazing, amazing sale and a great testimonial for you to then go to the next owner, the next owner, and the next owner, seller, right? And be able to then acquire those. Have them get on a phone call. Yeah, Alex makes his payments to us like clockwork every single month. He's been amazing. His team did exactly what they said they were going to do. Dude, you get a couple of testimonials like that, and the vaults are open.
Yeah. Tim, not to mention in this market, I think it opens the door for creative financing and seller financing even more than when I bought that facility in 2021. Right.
Agreed.
So
agreed, for sure.
Yeah. Sellers are more creative to get deals done. So they're entertaining these things. So anyways, I think challenging.
Well, they know that the property's not worth what it was in 2021 or 2022, but they're too stubborn. I'm a seller, right? And I want to get my price from 2 years ago, 3 years ago, even though the property wasn't stabilized at that time and I couldn't sell it at the time, but I'm trying to get that number today. But I know that I have to get creative, right? Offers aren't coming in where I hope that they would be. So guess what? Let me seller carry, they can assume the loan at 70% LTV. I'll seller carry 15% of it at 3%. It's almost like free money to me anyways, because I wouldn't be getting it if I just took an outright sale. And if it pays, great. If it doesn't, who cares? It's like I was selling it anyways, but I'm getting it off my plate and I'm able to move on with life. But yeah, dude, it's just understanding the psychology of a seller in that regard gives you a leg up, and then having the conversations to buy properties.
That's right. And here's the irony of that. I just found myself in that position like 8 months ago, where I sold 80,000 square feet of storage in a tough market, Jackson, Mississippi. And I learned a ton through that. Well, I seller financed $500,000 to get that deal done, because it was more important. I was more motivated to get the deal done than I was to try to squeeze out every penny from the deal that I possibly could. Right.
And talk about that. Talk about the psychology of selling a deal because you know what your time is worth and the energy is worth of not having negative energy in your life versus how many other deals you can do, right? And the opportunity cost that comes with all that.
Tim, dude, I feel like I could talk so long about this. I think the operative word in what you just said is energy. For me, it was a mental drain. Like one of the mistakes I made when I got into storage is I bought in the wrong market. I bought in Jackson, Mississippi, which high crime. I think the medium household income's 26, 27 grand. I had high default rates. I had a lot of delinquencies, a lot of auctions. Most importantly, or the biggest challenge for me was the constant break-ins. And what that was doing from a CapEx perspective and the money we had to put into the facility, not to mention our customers and their stuff getting robbed. I mean, it just became so much of a headache and an energy drain on me that I became a motivated seller. Now, fortunately, what I did right was I bought right. I had always heard from coaches and mentors, you make your money in real estate when you buy, you just realize it when you sell. Brother, I experienced it more in this deal than I ever have in my life. Fortunately, I bought it right. And so I had a lot of margin. But I became so motivated. The deal had fallen out of contract 4 times because when people go do their on-site due diligence, they realize, dude, this is a rough market. Like, you got burned down motels 2 blocks away. You got an abandoned shopping center right behind the storage facility. You got homeless people walking the streets during the day. Like, it was a D market, right? Fortunately, I
What
just
motivated
bought.
you to buy it in a market you've never been to,
Yeah.
right? In a D class market. Like, dude, you're
Yep.
somebody who was flipping for 14 years, who understands the value of location, location, location.
100%.
Um, why would you go and buy that? What motivated you
Yeah.
to take the deal
Um,
down?
a couple things is I think I fell victim to seeing the returns on paper, and I know better, knowing that I wasn't factoring in, okay, well, how much time, energy, and bandwidth. And I was getting it, Tim, at such a good price. I think I bought it for like 31 bucks a foot, right? Which is pretty damn good, especially this was in
Well, bro, you
2021 that I
can't build
bought.
it for $31 a foot.
No, you can't. And this was a 43,000 square foot facility. I knew I was stepping into cash flow from day one, and we did, right? So like I hit the numbers right on the head. I just didn't factor in like how much of a drain it was going to be from a management perspective. And that's that I had a third party management company overseeing it. But like when you have break-ins happening almost on a daily basis, brother, it starts to wear on you. And, over the course of owning that asset for 3 years, I just started to become a motivated seller. And so we ultimately decided to sell. I probably left 600-700 grand on the table had I decided to sell a year earlier, right? But
Bro, what's your peace of mind worth though?
it's priceless.
A
It's
lot more
priceless,
than that.
brother. So I bought that asset for 1.592, and I sold it for 2.495. Now, again, keep in mind I took back 530 grand in a note, so I didn't see that all upon the closing.
And how much CapEx did you put into it?
We put 34, 35 grand in capex into it. It wasn't that much.
Oh, okay. So
Yeah.
dude, you were able to take some cash off the table and
Yes.
create a $500,000 note.
Yep. Yep.
And
Exactly
most
right.
importantly, clear brain space. And how many more deals can you do now with because dude, it's not just about getting the money and having less time to go and deal with. Dude, it's like now I'm in a positive frame of mind. Now I can go and have positive conversations with my investors, with sellers, with my team, and my team doesn't have to get friggin' bat over the head with a club over and over and over again either.
Yeah.
Dude, it's like the mental capacity of the entire team is just so much better and the morale of the entire team is so much better when you're not dealing with that shit.
There's no question about it. I will say, and this might sound cliche, but like, man, I'm grateful having been through that adverse experience because, man, like there were times where it was a gut check. Like that deal had fallen out of contract 4 times. Fortunately, we found the right buyer that bought because it was a two portfolio package, 80,000 total square feet within 3 miles of each other in Jackson, Mississippi. Had that deal not gone through, brother, I don't know. We would have had to continue to have operated. And by the way, my note was coming up due. We were locked in at a 4.5 interest rate. That rate was getting ready to adjust. Like my debt service was going from this to this. And that now I would have had negative cash flow on top of all the headaches and all the concerns. So one of the lessons I learned, Tim, was never underestimate the length of time you think it's going to take to sell a commercial piece of real estate, right? Like, dude, I thought I was going to exit that in 6 to 9 months. It ended up being almost a 2-year sale.
Yeah.
Almost a 2-year sale.
Isn't it amazing how much longer everything takes, right? Like we think, I remember I was planning on liquidating some stuff last January, I think, with my team. And I was like, I'm launching 1,000 doors and we're going to be out of all this stuff by April. And we're just going to, have peace of mind. Bro, we are 15 months later and we've only sold 1 or 2 of the properties, and we sold like maybe 300 doors instead of 1,200. Now I got another 600 under contract, right? Which hopefully, knock on wood, closes in the next 60 days. But it's like, dude, it always takes more time, right? You think it's going to have, and we all underestimate how much time it's going to take. But at the same time, dude, you could be in a dramatically different place in 24 to 36 months.
Yeah, yeah. I mean, when I think about the amount of money that I made on that one transaction, I thought to myself, how many single family deals would I have had to have done for that? Right. And keep in mind, even with the headaches, brother, on that 80,000 square foot portfolio, even with the headaches, I was maybe spending 2.5, 3 hours a week, right, dealing with it. It was just when I was dealing with it, like, this is not why I got into storage, right? I don't want to, fortunately now, compare that to like my facility in Amelia Islands. I've owned that facility for over 2 years. I haven't had one break-in. Like, it's just the easiest asset to manage. So
is that an A-class area? Is that what you call it?
Yeah, that's an A-class area, right?
So I think that the lesson here is, guess what, dude? I got started in D-class areas and C-class areas, right? And I think you got to cut your teeth on some of this stuff because you can't really get into the A-class stuff unless you start somewhere. And for me, it was like, dude, I needed to, the D class and C class stuff, it was bigger than what the small investors could qualify for, but it was hairier than what the big guys wanted to buy. So that allowed me to go and buy thousands of units in like C class. I didn't really buy any D class when I got into apartment buildings, but I had a bunch of C class stuff and I was able to get into a lot of it and create a lot of value add. But because of the management headaches, I couldn't scale beyond that, right? It was so hard because you're always putting out fires.
That's right.
You're always dealing with break-ins and you're always dealing with turnover. And you can't ever stabilize an asset because of the turnover that happens in C-class areas. But it's an accurate, or it's not accurate, it's a important deal for somebody, right? Like somebody is trying to get in their first apartment complex. And this could be the stepping stone for them to get into their first apartment complex or their first storage facility, which then is going to lead them into the B class and then the A class areas. And guess what, guys? That's okay, right? Because you just don't want to stay there. It's not a bed that you want to lay in and be there all the time and be there for the rest of your life. It's a ladder to the next level of B class and A class and then bigger stuff and then nicer areas and whatever else. So it's not to say that nobody should go out and buy these assets. It's to say that it's a stepping stone, right? And you don't want to stay there forever, but use it as something to propel you to get to the next level and the long term where you're looking to be.
So much wisdom in what you shared. And I think what really jumps out at me is I've asked myself, because one of the things I like to do, man, whenever I get into business or whenever I do a deal, I like to Monday morning quarterback the situation, right? Like after the fact, look back, okay, what did I learn from this experience? What could I have done better? How can I use this experience to sharpen me going forward? And so when I've asked myself, hey, what did I learn from this? And I've shared some of it. I asked myself, like, would I do this deal again, knowing what I know now? And sometimes the answer is yes. Sometimes the answer is no. I think I'm leaning more towards yes, because it was a stepping stone. It gave me confidence. I knew that if I could succeed with that facility in a rough market, like there's no facility that I couldn't succeed at, right? I learned so much that I wouldn't have learned had I just focused on better markets. Now, when I coach people now, like the market, the demographics, like really getting into the right area. Again, location, as basic as that sounds, I violated that principle. And so I get to pass on that experience to people that I coach now, but I don't regret it, man. I'm glad I went through it. It was painful while I was going through it.
Sucks while you're in it though.
Yeah, let me tell you, man, there was some sleepless nights. Like, because again, it was a success, but I was razor thin. The margin was so thin from it being a success to it being like an epic failure. And so, yeah.
Well, bro, I think it's worthwhile to sell even if you're selling at a loss, because you're an opportunistic guy and you have the ability to go out and make deals happen. And going back to the original, thought that you said, like energy, dude, putting positive energy towards something else, you can go do 5 other storage facilities in B class areas with the exact same amount of energy and mental capacity as this one D class, right? And think about, even though the numbers are more marginal, even though it's not as sexy as pro forma, bro, the C class and D class stuff never plays out to pro forma. It never ever does. There's always more turnover. You never get it to 98% occupancy. Like, it just doesn't.
Not even
happen.
close.
Yeah. And the B class stuff and the A class stuff doesn't look as sexy on paper, but what they don't tell you is it doesn't turn over, dude. And if it does, they give you 90-day notice, and you can start pre-marketing the unit. You can line up the contractors to turn it in a day, right? Like everything is easier. And when you get into the nicer properties, dude, the buyers want to buy it. The renters want to rent it. The insurance companies want to insure it. The lenders want to lend on it. The investors want to invest in it, right? Your property managers want to manage it. Everything is easier. The maintenance guys want to maintain it. The leasing agents want to lease it. Everything is easier, and everybody wants to be part of nicer deals.
This episode of the Legacy Podcast is brought to you by the Legacy Boardroom Mastermind. So our goal is to give as much free information away as humanly possible through all of our social media platforms and try to help people with their businesses, help people with their lives. We also have something for people who want more one-on-one attention, which is Legacy Boardroom. Legacy Boardroom is a board of directors for your business. If you are doing up to about $10 million a year in gross revenue, you're making some money, you got some good things happening, but maybe you can't afford a C-suite of executives, of a chief marketing officer, a chief operating officer, a chief investment officer, a chief human resources officer, and you need access to these fractional C-suite executives. That's what this was built for, at a fraction of the price of what you can find anywhere else in the marketplace. So it's my actual team who have built multiple 7 and 8 and 9-figure businesses and real estate portfolios that is available every single day of the week on these daily boardroom calls. So any questions that you have, you can hop on, ask questions about operations to my COO, ask questions about acquisitions to my CMO, ask questions about raising private money to my chief investment officer, or team building to my chief HR officer. So they're available for you 5 days a week. Any questions that you have, any hurdles that you're facing, anything that you need, these guys are available to help you break through any sort of barriers and take your business to the next level, so that way you can build a business that is designed to feed your life and your lifestyle. So if you're interested in learning a little bit more, check out legacyboardroom.com.
I agree. And by the way, even if you hit the pro forma, ask yourself, is it worth the time, energy, and mental bandwidth, right? And for me, it's not.
It's not. It's not. And I think it comes with awareness, though, dude. It comes with being around the block for a while, and the wisdom that you get from not being newer. And guess what, dude? This deal would have been fine if it was your first deal, and you could have been like, oh my God, I made a bunch of money and created a $500,000 note. But you have something to compare it to, and you understand what the highest and best use of your time and your energy is. And so for you, it was a drain. But again, that doesn't mean for somebody else that's not a great opportunity. So, accolades to the person who took it over and bought it from you, because they were able to then negotiate great terms, get into a great asset that's probably going to be a stepping stone for them to get into the nicer stuff that you're currently in. They're just not as far along on the journey, and which is totally okay too. So let's dive into storage. Storage, and by the way, I bought and sold 3 storage facilities, over 1 million square feet of storage. And one was in South Florida near you, another one was in New Jersey, and another one was in North Carolina. And of these storage facilities, we made money on all of them. I bought them all in 2019, 2020. One was built, right? And then we ended up selling them within a couple years. So it could have been the market. It could have been whatever else. We did a decent job with them too. So I made money on self-storage, right? So I'm asking you this question, kind of tongue in cheek, because I've had success in self-storage. But what I've also seen, and the reason I'm not doing more self-storage right now, is there's been a lot of people who have gotten into self-storage. And I think, and it's not like apartment buildings, right? Apartment buildings, you own an apartment and I own an apartment across the street from each other. You're a great landlord. You respond quickly to tenants. You have great units. It's all the same price point as mine, but I don't respond as quickly. I don't take care of the units as well. I don't screen my tenants as properly. And guess what? You earn all of the tenant base because you have nicer units at the same price point or a lower price point, or even a higher price point, because you better manage the asset. And people want to, and this is where people live, so they have a lot of pride for that. And so I dropped down to, 50% occupancy. You stay at 100% occupancy, right? And so I can't get above that because I'm a bad landlord, and that's where life leads, even though it's in the same exact location. In self storage, and correct me if I'm wrong here, but a lot of the statistics that I've read is that I can't remember, 8% of the population uses self storage. And if 8% of the population uses self storage, if that area is not growing and population is not increasing, and you build more self storage or convert more office to self storage or whatever, and more self storage hits the market, there's not the absorption there for that. And so what happens, people don't care as much about where they're storing their stuff. They care a little bit, but if it's air conditioned or not, or an extra mile down the road or not, you and I are across the street, even though yours is a lot nicer and mine isn't as nice, cannibalism starts happening, right? And you never get up to 90, 100%. And I never really drop below 70%. You might be 80 and 70 instead, or we're both at 75% occupancy. And neither of us can ever get beyond that unless the population grows further. Give me your take on that. Is that not totally accurate? Or because what scares me isn't great operators, it's the dummies that don't do the feasibility studies and then overdevelop 3 years after I bought a self-storage facility, and then it cannibalizes the marketplace.
Tim, you're 100% spot on. I can't refute anything you just shared. I think one of the biggest mistakes that people getting into storage could make is buying in a market that has an oversupply of storage, because in my opinion, no matter how great of an operator you are, if you buy in the wrong market that has a high square foot per capita, in other words, the square footage available to lease up and rent relative to the population in that 5 mile radius, if that's high and you have an oversupply of storage, I don't care how good of an operator you're going to be, you're going to have a hard time leasing up, right? And so look, that facility that we talked about a little while ago that I sold, when I was under contract, I found out that Extra Space was coming in about 4 miles away and throwing up, I think it was like 80 or 90,000 square feet. Now it was going to take them 12 to 24 months or whatever it was going to, but that would have killed me. An extra 80, 90,000 square feet of storage within a 5 mile radius of my facility, like that would have severely impacted my ability to lease up. So picking the right market, to your point, making sure that you're in a market where there's jobs coming in, where the population is increasing over time, so important, man, because again, it doesn't matter how good you are from an operations perspective. If you buy in the wrong market, you're going to have a hard time leasing up and just getting that NOI up.
Yeah. Here's where I think there's probably one of the best plays in all of real estate is developing self-storage, right? Because you can build it for a third of the price of multifamily, but still sell it at the same cap rate as multifamily, which is like mind-boggling. It's transactional, but then maybe you take those proceeds and then you go and invest passively or whatever into maybe some multifamily or triple net or whatever the other asset class is. But dude, I think there's a massive opportunity there, and one of the biggest opportunities to develop and then sell. And maybe there's an opportunity to create a relationship with some of those developers, and somebody like you comes in who is a great operator and says, hey, sell it to me at CO. I'll handle all the lease up. They get a couple bucks off the table. Maybe they come and roll in as a LP in your deal, a portion of their profits as well. Makes the deal work for you. You have a great asset, and obviously you got to just like, what does it look like from a due diligence standpoint in order to understand, does this facility make sense in this area with the population growth? Like, where are you going and understanding the feasibility and absorption rate of these things?
There's a couple tools that I use, Radius Plus being one of them. I don't know if Radius Plus does anything on the multifamily side of the business, but Radius
I haven't heard of
Plus,
that. No.
Yeah, so Radius Plus, Tract IQ is another tool that I really like to use, where the cool thing about these tools is that it'll tell you if there's open permits for storage construction, like already opened up in the county. That is like, it will tell you. 100%.
That's good.
That is a valuable tip. So anybody out there looking at storage, make sure, like, check with the county if there's any open permits because you want to know that going in. If you buy a facility or if you buy a piece of land and expecting to develop, but you don't know that another 30 or 50 or 60,000 square feet of storage is coming online in the next 12 months, like that could present a problem for you. So tools like that make it super easy to be able to like tap in. I always verify those tools anyways, because they're not always 100% accurate. But yeah, dude, look, to your point, like one of the things I always look at is the competition within the 5 mile radius. If I see a lot of promo rates online, if I call and there's a lot of availability, that's a red flag for me. Like I'm thinking twice about developing storage unless I feel they're just very unsophisticated operators, right? And that's one of the things I actually like about storage is that it's not uncommon for these mom and pop operators to just not treat it like a business. That facility I bought in Amelia Island, no website. They hadn't raised rates in years. They just weren't
no automations, no technology,
nothing, no automated gate, like just things, very simple value add opportunities that somebody that just knows a little bit can go in, treat it like a business, and significantly increase the revenue there. But yeah,
well, dude,
so
I think that's, it's like a value add apartment. It's a value add self-storage. And I think that is another brilliant play is just go in and say, hey, let me buy this thing, right? And take it over. Dude, I think another play that could work for you is you've got all the automations. You understand how to do all this stuff. Go to somebody who already owns it. You don't even bring any money. You just bring the operational intelligence and maybe some of the CapEx, the 30, 40 grand.
Yep.
And you say, hey, you're right here, right now.
I can take you here.
I can take you out. Let me keep 50% of everything on the upside with the intent that we're either going to cash flow this or they have some sort of exit strategy in the future, either refinance to get my money back out or we exit it. But hey, if I can't buy it for this price point down here, let me come in, bring operational efficiencies. I'll invest the money. I'll increase the value. And then we exit it at a higher value of getting you your price point. And then I get a piece of the action just because I was involved. Dude, I think that's a brilliant play.
I'm going to be honest, man. I had never thought about that, particularly as a fallback if you just can't come to an agreement on price or terms.
Yeah.
It's like, okay, well, you don't want to sell. What if I could increase your revenue X%? Would you give me a piece of that? So, dude, I actually love that play. I like that a lot.
It gives you another arrow in the quiver of being able to make your offer at cash, make your offer at seller financing, make an offer at almost like a joint venture partnership where you're able to get them their number, you're able to get the terms. And by the way, you're buying a $1.5 million asset for 50 grand out of pocket.
Yeah. Yeah.
How hard is it to raise that money? You don't even need to raise the money. And now you're getting 50% of all the upside beyond 1.5. Now you turn around and sell it for $2.5 million. Take your 50 grand back and you get $500,000 note, even if you gave the cash to the seller. It's like, that's a pretty good ROI, bro.
Not bad. And by the way, man, those opportunities, and I know this is going to sound very obvious to you, but there's people probably listening that, and I know you have a very high level audience, but sometimes I talk to people that don't believe those opportunities are out there. 100% those opportunities are out there.
Dude. And we look past it, right? We just make these assumptions that they're not willing to do that. A couple of years ago, the Chrysler building in New York City sold, right? And it was bought at the peak of the market in 2006. 2000.
How much did it sell for?
Sorry. It was bought at the bottom of the market in 2009.
Okay.
Right after the great financial collapse in 2009 for $800 million. Came on the market 10 years later in 2019, and it was like an undisclosed price. And all these big players came in, looked at it, underwrote it, couldn't make the numbers work. They're like, hey, they bought it at the bottom of the market for $800 million. Now we're kind of 10 years later, dude, this is like almost the top of the market. If COVID didn't happen, 2019, 2020 would have been the top of the market. And it just, all the inflated dollars kind of kicked that down the road. But they're like, I can't possibly pay $800 million for this building. Well, guess what? Some frigging group out of Scandinavia comes in and they underwrite it. And they actually make the offer, and they offered $150 million for a property that sold for $800 million 9 years, 10 years before. Insane. And they got accepted.
Insane.
Because they had the balls to actually make an offer and nobody else did.
If you don't ask, you don't get.
One of the most iconic buildings in the entire country based off of having the balls to actually make an offer, right? And so to your point, you just got to make the offer. Have the conversation.
Yeah.
Don't make assumptions in your head and come to these foregone conclusions that aren't real. They're just stories in your head. Actually put it out there and see what the seller says. The worst thing they could say is no. And then you're like, all right, well, let me look at the next opportunity.
Tim, the gap between success and failure and you have a lot more years of experience and have done significantly more deals than I have in the commercial world. But to me, the gap between success and failure is the number of offers that you make. Mm-hmm. That's it, dude. So like
it's the quantifiable metric that determines your level of success. You're absolutely right.
That's right. My dad taught me, man, when I was a kid, and it always stuck with me, is closed mouths don't get fed. Right. So like if you don't ask, you don't get. Like when you have a meaningful conversation with a commercial owner, right? Whether it's apartments or storage or whatever, like if the deal doesn't work, I always ask myself, what would make this deal work? And usually it's price or terms. And then I'll float that out there. Hey, listen, I realize this might not work for you, but here's kind of where I need to be. And then I'll back that up with some logic. And man, sometimes I'm surprised. Sometimes I think to myself, shit, I should have made a lower offer.
Or yeah, exactly. Right. And even if they say no, at least it gets the conversation going, and maybe they counter. Maybe they say, hey, Alex, dude, you're getting close, right? Actually, I would have turned this down, but because of this, this, and this, I totally understand. Maybe if we did that or whatever. And it gets the conversation going where you can keep on moving closer and closer in order to getting a deal done, dude.
Yeah. And most people aren't doing that, by the way. So just by the mere fact of making more offers, I think that you're separating yourself from probably most people that they're talking to.
I love it, man. Well, dude, I love your mindset. I love what you're doing. I'm super proud of you and the changes that you made in your business and how you've elevated things, and the consistency on your podcast, right? The consistency in your coaching, the consistency in your giving, the consistency, because dude, when I say giving, you're not only giving to people who want to grow their business, but you guys do a ton of charitable work and a lot of giving back. And I truly think you're one of the thought leaders and leading the charge and trailblazers in that space. More so than a lot of other people who could be doing that and just aren't, man. So I appreciate you. I appreciate all the impact you're making, man. What is the best way, like you're coaching, right? Because you're teaching people how to get into self-storage stuff. Like, what does your coaching look like? Where can people find you?
Yeah, man.
Is there a website that you've got that you can share?
Yeah, thank you so much, man. Again, man, this is always a fun conversation with you. A couple different things. The podcast, the Flip Empire Show, after almost 9 years, like literally within the next 2 to 3 weeks, it's going to be rebranded to Storage Wins. So right now, if you look up the Flip Empire Show or Storage Wins on Apple Podcasts, it'd be awesome to subscribe, because I'm just putting out a lot more content about storage. And by the way, not just sharing like the wins, but also the challenges, the lessons learned, because I think that's extremely valuable to share and be transparent about those things as well. But yeah, if you head over to storagewins.com, you can find out more kind of about what we're doing there. And I'm starting to put out more content on YouTube now. I wish, again, I would have followed your lead years ago and just been more putting yourself out there and just sharing, because sometimes we take for granted the things that we've experienced. And I think when you put yourself out there, I think oftentimes it just gives people confidence and inspires them that they can do this too, dude. Because you and I, like, we're not dumb, but we're not like, it's nothing special, man. We're just putting ourselves out there. We're clear about what we want. And so I'm really hoping to inspire more people to like either transition from single family over into storage and commercial in general, or just add that to their portfolio.
I love it, man. Well, you're doing amazing things, making a big impact. And like I said, man, you're at the very top of the people that I respect the most in this industry, and love having a conversation with you. It needs to happen more often, bro.
Appreciate you, man. Thank you so much, brother. I love what you're doing, man. And I'm grateful, man. I think Tony Robbins says the quality of your life is impacted by the quality of the relationships. I'm grateful because of guys like you in my foxhole that I'm always there for, that you're always there for me. And so like, I just can't help but connect with somebody like you and think a little bit different, just become a better version of myself, man. So I appreciate the opportunity.
You're the man. Alex Pardo, thank you for being here on the Legacy Podcast.
Hey, well, thank you for being here. Hopefully you got a ton of great value out of this episode. We try to give as much free value as possible across all of our social media platforms. So please make sure that you're connected with us. We are at Legacy Wealth on YouTube. We are at Tim Bratz on all other social media platforms. And we're available anywhere that you listen to podcasts. The best way that you can support this podcast is by just subscribing to our YouTube channel, by liking the video, by commenting on it, and by sharing it with anyone else who might get some great value out of it. So thank you again for being here. We'll see you next Sunday on the Legacy Podcast.